Today, I will tell you an important subject. It will be a comparison video. The video will explain which methods people without the necessary knowledge about investment should choose and how those who have the knowledge should proceed. What kind of investment style should you follow? Let's discuss short-term investment. In short-term investment, the time frames can vary. For some, short-term may be 1 month, while for others, it may be 1 week. Some even consider 1 day as a long-term investment. It's a relative concept, but we often refer to trades executed in less than a year as short-term investments. Another definition of short-term investment is as follows. Short-term investment is the method applied by investors aiming to achieve results within months, days, or even minutes. Therefore, those who use this investment method focus on buying low and selling high, rather than relying on dividend income. Long-term investors, on the other hand, prioritize the risk factor when considering the sustainability of this method, so it may not be suitable for them. However, the key point here is buying low and selling high, which can be described as engaging in a trade. Honestly, I haven't said anything supporting short-term investment on my channel. However, it is a fact that there are a large number of people who execute it professionally. We can approach the short-term investment method in the following way. If you do it to minimize the risk, you won't lose. For example, if you have invested in a company, set an expectation. When it increases by 15%, whether it goes up or down doesn't matter to you. Your limit is a 15% gain. As soon as you achieve that, exit that stock and move on to another. In this regard, your research will be necessary, because you may have to wait for 1 day or 1 month for this. Honestly, I also do this. However, I do it considering the risks. If you disregard the risk factor and continue, your savings will continue in someone else's hands. Often, losses in the stock market are the result of investments made without research, based on hearsay from news or other sources. Therefore, it is best to maintain your composure. You should consider both your gains and potential losses. If your limit is a 15% gain, you should also anticipate a 5% loss. But if you say it doesn't matter to you whether it goes down or up until you see a 15% gain, your composure is the most significant factor. What else can we add to the pros and cons of short-term investment? 1. Commission section. What else can brokerage firms earn money from? High commission rates can be a bit burdensome. For example, let's say we are working with a brokerage firm that has a 5% commission rate on $10,000. When you make a buy transaction, $50 will be deducted, and the same applies to a sell transaction. Thus, you incur a cost of $100. In order for you to recover this, you need to achieve a margin of at least 1% or 2% so that these figures become insignificant. Therefore, when you engage in buying and selling, you face a disadvantage such as commission. Although it may be small in the short term, it can be a disadvantage to your returns in the long run. 2. Probability of making mistakes. Friends, the more the amount you engage in buying and selling increases, the more decisions you have made. If you make too many decisions, the probability of making mistakes also increases accordingly. Jeff Bezos once commented, "I don't make too many decisions in a day. Making a few very good decisions is enough." Personally, as someone who advocates for a long-term approach, I believe that making too many decisions leads to mistakes. That's why my investments are based on the long term. Making one correct decision can lead to good returns for me in 5 years. However, individuals who engage in short-term buying and selling may claim that they will achieve capital gains by buying low and selling high. But as I mentioned, the probability of making mistakes is really high. When you engage in short-term buying and selling, you have many competitors to beat in the market. 3. Time commitment. You need to be constantly in front of the screen, waiting from the market open until it closes. Being in front of the screen makes you disconnected from life. It's quite a stressful situation. Of course, there's also a necessary addition. If you have another job, short-term investment is not for you, because when using this method, you need to allocate all your time to it. Otherwise, the short-term investments you make will not be a method that will generate much profit. Even if it is your only job, risks will never leave you. You will need to manage this profession professionally. 4. Risk ratio. If we try to balance the potential return with the risk ratio, our returns may turn out to be quite low. Therefore, when you engage in short-term buying and selling, you are taking a very high risk. When a lot of buying and selling is done, along with the commission expenses, very good returns cannot be obtained in the long term. We frequently see this when we look at the past. Are there professionals? Of course there are. Are there winners? Of course there are. But if we compare, the proportion of those who fail is very, very low compared to those who succeed. We can say it's around 5%. Of course, this is an example figure. In today's technology, we can see many people who make money in the short term as soon as we go online. Of course, this gives us unnecessary self-confidence. As someone who fell into this trap in the past, I must say that no one will give anyone money for free. We discussed the downsides of short-term investment. Let's take a look at the positives for a moment. 1. Quick returns. When implementing this method, the returns are indeed quick. The expectations are also shorter term. When I engage in daily buying and selling, I aim to achieve a margin of 1% or 2%. But is it possible every day? Never. On the flip side, losing money can also happen very quickly. 2. Passion. This emotion helps you control and assists you in short-term investments. It manages your satisfaction. After all, we consider this as our own business. Therefore, during the moments when we engage in buying and selling, this passion will guide us with excitement. We will experience the thrill of adrenaline when we buy low and sell high. It's an instinct. For example, why do people gamble? Because they want to satisfy these instincts. 3. Protection against decline. By quickly selling when a market downturn begins, it may be possible to escape from a prolonged bear market. We long-term investors don't often have such an opportunity, because when making long-term investments, a certain period is set, and the stock is checked at certain intervals until that time. Because the buy-and-forget method is applied in the long term. Let's now talk about long-term investment, considering the pros and cons together. I have been involved in this method for about 3 years. Frankly, I have a temperament that doesn't like stress, so this method suits me perfectly. I am not someone who has tried short-term investments and succeeded. However, I do engage in short-term investments with about 10% of my investment. But I do it while mixing it with long-term investment. I set a target and do not sell until I reach that target. This has not put me among the losers so far, but of course my investment is based on the long term. 1. Buffett style. I have talked about Warren Buffett in my other videos, but to give a brief explanation, Buffett has become one of the richest people in the world with long-term investment. I won't go into too much detail about Buffett here, but I plan to prepare a playlist about Buffett in another video. So, we have provided that information as well. Buffett style is a long-term strategy. If you look at the richest people in the world, you will see that they know how to be patient. They are composed individuals. They understand the value of their time. Therefore, when comparing time and money, you clearly see that long-term investors are the richest people in the world. Short-term investors are not that wealthy. The line is holding assets for 1 year or more. If you are going to choose one of them as a method, you should look at the pros and cons of both methods. The investor profile is your choice. Remember that. First of all, are you patient enough to make long-term investments? It may take 1 or 5 years to get returns. We don't make investments here to get quick returns. We have goals. Long-term investment is a retirement project. Therefore, we should not ask ourselves, how much did I earn in the long run? 2. Dreams. We create many dreams. We see that we will be rich in 10, 15 years, and we have many other dreams accordingly. However, encountering a bear market can shatter your dreams. In the long term, a bear market will not mean anything. But if you are just starting to invest and you start with a bear market, it can lead you in a negative direction. So stay calm if you start with a bear market. Remember that you have a goal. Continue with those dreams. A bear market will not harm you. 3. Research. Research is essential in short-term investments, and it is also important in long-term research. However, it doesn't require as much research as short-term investments. Instead of daily research, it will be enough to see the company's future and conduct the necessary financial research. But if your research is not enough and you make a wrong investment, don't wait 1 or 2 years and harm yourself. Learn to exit at the right time. When you admit that you made a mistake, you learn from the investment. The positives of long-term investment are, of course, high. When we look back, we see that long-term investors are much more successful, because in the short term, the chances of success against investors are high. In the short term, your success rate may be 5%, while in the long term, it can be 95%. 4. Dividends. You can also receive dividends in long-term investment, just like in short-term investment. However, long-term investors cannot do without dividends because they consider their retirement. Dividends are the foundation of long-term investment. In conclusion, long-term investments can provide high returns with low experience but certain competence, while short-term investments may not provide gains even with high experience and competence. In fact, you may lose. In the long term, checking the financial statements once every 3 months is sufficient, while in the short term, you need to dedicate your time. You need to watch it even while having a meal. In the long term, you don't care about commissions, while in the short term, it has become mandatory. Long-term investment is the best way for non-professional investors. If short-term investors are aiming to improve themselves in this regard, they may initially lose money. However, if they persist, they can also be on the winning side. Of course, since my temperament is suitable for the long term, I can explain these to you rather than giving you advice. In today's video, we generally discuss the pros and cons of long-term and short-term investing. The decision is yours. If you liked the video, you can subscribe to my channel and click the like button. Don't forget to turn on the notification bell. We will continue to make similar videos. Thank you for watching the video. See you in other videos. Goodbye.